direct ownership, the hands-on wealth builder, the hands-on wealth builders. This means that you have full control over this property. You select your property, you decide on the management decisions, and you structure your own exit strategies. So potential for high return is there through forced appreciation, rental income, and also to your cash flow. That's in your direct ownership. So, you could even get good returns, or rather get profitable when it comes to your tax advantages also, too, including the depreciation, cost segregation, mortgage interest, deductions, and the ability to also, at the end of a cycle of an investment, you could execute 1031 exchange to defer your capital gains taxes. So leverage allows investors to amplify returns using the borrowed capital in this case, which requires significant time and effort to find, acquire, and manage property effectively. Those are one of the aspects that, it requires a lot of effort. You have to be self-motivated when it comes to being a owner, Obviously, in some aspect, high upfront capital is needed for down payments, your closing costs, also to raising capital for renovations, value add. Direct exposure to market risk, also to tenant issues, maintenance expenses, and regulatory changes. I mean, those are the some aspect I will say I won't say unpleasant, but really requires effort, actually. So you really have to be self-motivated to be able to stand up to these challenges, little depending on how big the property is or what it entails. So even active management responsibilities that you may have to offer. That is, if you're not engaging a third party, unless you hire a third party, then obviously that will eat into your returns, actually, your net income.